Bill Black joins us. What can be done at this point by someone in my position, in Lisa's position, or any other position to prevent 10 more years of pretending and fraud so that we end up in the total dismantling of the social contract in this country and intervene now when there may be still an opportunity to both audit the fraud and begin some sort of restructuring?
Well, you can continue to do just what Lisa and you and folks like us have been doing because it's starting to work. Last week, for the very first time, a Nobel Prize winner, Joe Stiglitz, said this crisis is all about fraud. Now, Krugman still can't quite bring himself to use the F word very often, but empirically, we know that Lisa isn't simply the soul. Her analytics are correct in most places, and Geithner's analytics are disastrously wrong in most places. So here are some numbers. Credit Suisse says that by 2006, 49% of all mortgage originations in the United States were liar's loans. The lowest incidence of fraud when we study liar's loans is 50%, and that's when the fraudsters study themselves. When independent folks study it, it's in the 80 to 90% fraud range. That means there were millions of acts of fraud. Those loan frauds occur not because there's some clever person making $20,000 a year who is able to deceive the banks, but because the banks created incentive structures for the loan brokers to bring them the absolute worst of the worst loans and to lie on the application forms to hit the magic ratios on loan to value and things like that that a homeowner wouldn't have even known what number to put in. So these frauds came from the banks, and they propagated through the system through a series of what we call echo epidemics, in which they got appraisers first to give them grossly inflated values, and there are excellent numbers on that, to give outside auditors to give them clean opinions on ludicrous financial statements. Every single time they were able to get a clean opinion, and every single time virtually they were able to get a AAA rating out of the credit rating agency. So this fraud did in fact spread through the system, and that's why we have a crisis in foreclosures now. This is not a random, unrelated fraud. This stems from the underlying fraud by the lenders in mortgage loans to the tune of more than well over 1 million cases a year by 2005.
So then if we were to look at the two ends of the spectrum that most affect Americans, the homeowner, which we've been discussing and will continue to discuss as the critical intersection, and then what I would argue the secondary intersection is all of the taxpayers who are being asked to support this corrupt and fraudulent banking system through Fannie Mae, Freddie Mac, the Federal Reserve, and direct expenditures authorized by our own Congress. In addition to what we're doing on foreclosure, Professor Black, what percentage of the paper that was given to the guts of the American taxpayer in 2008 by George Bush and Hank Paulson and then perpetuated by Barack Obama and Tim Geithner, what percentage of that is indeed fraudulent, and why don't we know that 2 years later?
It's exactly what we've been calling for, and why didn't we know it at least 5 years ago when most of this was done? So Bernanke has just announced they're going to do an intensive review of the assets they accepted as collateral. So you wait 1.5 years and then you look at your collateral? Now, what would happen if you were the most junior VP at a small savings and loan, if that's what your approach to business would be? This is supposed to be the most sophisticated guy in the world. And so what should we do now? We should look, and we should look on a scientific basis. We have the ability, because of Fannie and Freddie, the Federal Home Loan Banks, and the Federal Reserve taking all this money in collateral, to do a superb sampling job that'll tell us exactly what happened in mortgages. That's what has to be done. It cannot be done by the Fed because it's in a complete conflict of interest. The Fed cannot admit that it took over $1.5 billion in toxic garbage and didn't recognize the losses on it. So it's led the cover-up. It's the Fed, through Bernanke deliberately, working with the Chamber of Commerce and the American Bankers Association, who got Congress to extort the Financial Accounting Standard Board to pervert the accounting rules so that they wouldn't have to recognize the losses. Because they don't have to recognize the losses, they report fictional income and massive bonuses, and they gut the prompt corrective action law. All of those things need to change. We call for bringing in the FDIC, which is the best of the worst, and the GAO to look. But have you had a chance to look at Borofsky's report today?
Yes, I have. I have unfortunately had that opportunity, yes.
Yes, exactly. Wherever we look, we find massive fraud. And look now, Fannie and Freddie have started to look. The Federal Reserve Bank of New York have started to look. BlackRock, PIMCO have looked. And one of the major monolines looked, said that 97%, this is AMBAC, said that 97% of the loans that Countrywide provided to it were sold under false reps and warranties.
And listen, I'm going to wrap this up just on the basis of time, but you do really have to really start to wonder how much longer this president or any president can get, or any political party can get away with the turn the page and we'll just move on and be friends concept of economic policy when the fraud is at the core of the system.
No convictions. Yeah. Dylan, no convictions versus over 1,000 in the savings and loan debacle. Fire Holder, fire Geithner, fire Bernanke. Get people in who will enforce the rule of law.
Professor Black, Lisa Epstein.
And stop the foreclosures.
Listen.
Stop the foreclosures.
Fire Holder, fire Geithner, fire Bernanke. Get people in who will enforce the rule of law.
Fire Holder, fire Geithner, fire Bernanke. Get people in who will enforce the rule of law.